everybody. This is Felicia again, coming to you live. And the guest speaker, Karoline Puma. She has a company called AFCG, American Financial Consulting Group. And her family immigrated to the United States when she was a teenager. Karoline's academic achievements in high school and in college gave her the opportunity to build a career at an early age. She has worked in the real estate industry for the past 27 years. She was associated with two of the leading real estate offices in the area, working both sales and management levels. While pursuing her global MBA, Karolina has continued to utilize her experiences in the real estate and her BA management and psychology, which has opened other avenues in finance industries such as working for major national mortgage companies. Her expertise, satisfied customers, and charisma have led her to serve the community and now providing more services, showing her knowledge and experience through her financial consulting office. Professional and business ethics are the two fundamental missions that are offered customers in the business partners with a team of professional American Financial Consulting Group provides financial solution. It is with my great pleasure to introduce Karoline. Without any further ado, I'm going to put you on speakerphone, Karoline, and you can perhaps talk to everybody loud because I can put you on speaker and everyone can hear you, and we'll go from there. That's the best suggestion that I can offer when it comes down to doing questions because I have it on speaker. Okay, say something, Karoline, because we have a few people that's listening. Say something.
Hi guys, thank you so much for the patience. We are here anxious to give you more information. We're just trying to deal with this link.
Yes, thank you so much. So Karoline, I wish your face was here. So I'm going to talk to the phone as if it's your face because you and I go way back, Karoline, right? We go way back, don't we?
Yes,
So
we know each other in the professional business for so many years.
exactly. Over 30 years, I would say, right?
Yes, about that.
I know. And tell me why we still look like we 30. I don't know. We must drink from the same pond.
I was just saying, coffee in the morning and wine in the evening.
That's it.
To remove yourself. Right?
I love it. So, hi, Derek. How are you? We're going to talk some great stuff about properties that might be experiencing foreclosure, short sales, and how you can keep your homes and all that other kind of stuff. So, Karoline, I don't know if you heard me. I read your bio to everyone about what it is that you do and how you can be an aid to many agents. So if there's any agents on this call, you can do some JVs with them and they can get some great knowledge and information about their homes and how to help clients that they may be involved with. So that's why I told many agents to come because it would be a great opportunity for them to learn how to navigate through these waters, right?
Yes, Felicia, and thank you so much for the invitation, and thank you to the people who have joined us so far. So we want to talk about foreclosure alternatives. What does this mean? Is the way to save your home before foreclosure. Foreclosure should be the last step or the last option. And in order to get to there, that means that either you didn't pay attention to all the letters and all the notifications and all the calls that the bank did to help you, or you did not have the right information or the guide that you needed. So when we talk about foreclosure alternatives, we want to mention 4 of them, which realistically is modification, short sale, deed in lieu, and the last step, which will be the foreclosure. Between the modification and between the first month of being late and being able to modify your loan, there is something also called repayment. And lately we've been using more than before. We used to jump just to the modification and be able to help people. But due to the rate difference between the people who were able to get mortgage rates at 2%, at 3%, at 4%, it is better sometimes to help them with a repayment plan because the modification will become eligible and approved at the current rate. Therefore, we are exploring this new option of repayment plan because we want to keep the monthly payment similar to what they used to have. Let's continue. When a repayment plan is the right option, I would say if the person is less than 6 months late, it is the right option. Once the family have carried the late payments for more than 12 months, I will say it becomes harder to catch up on a repayment plan. A repayment plan means you will continue making your monthly payment plus an extra amount that usually is divided by 12 or 24 months or whatever late due did you have in order to catch up with your payment. So it is an opportunity that they tell you, okay, you have $20,000 past due, but your monthly payment is $2,800, so we're gonna divide this $20,000 by 24 months. You're gonna continue paying your $2,800 plus this extra $600, for example, until you catch up for the first 24 months. So it is affordable to do it if they are not that late. If they are only 3-4 months late. Maybe I would say up to 6 months, depending on the financials of everybody. Sometimes they lost a job and then it took 2 to 3 months for them to get back on their feet together, and then it's a good idea to do a repayment plan. When that's not possible, we have to continue to the next step, which is a modification. A modification, what it is that we're gonna do a new mortgage note. The new mortgage note is going to have a new mortgage balance because now you have the original balance that you had it plus whatever late fees, attorney fees, and late payments you have accumulated through 1 year, 2 years, maybe 3 years. So now we're going to add this amount to your entire loan amount, and then they're going to divide it. The bank is going to decide how much is going to be your new monthly payment. In order to help you to make it affordable, sometimes they would take a portion of that loan amount. So let's say that loan amount is $400,000. They would take $300,000, make amortization payment for 30 years, and then the $100,000 they will put it as a silent second mortgage with no interest payment, which means that you owe them $100,000. We know your total balance is $400,000. However, you are not going to make any payments on it. What's been happening lately is that people forget that they have those silent mortgage, and when they try to sell the house, they show the realtor, here is how much I owe. I owe $300,000. Oh no, you don't owe $300,000. You owe $300,000 plus those $100,000 that you signed as a second mortgage note when you did a modification in order to save your home. So that's what the modification process is. And eventually what we need to do that is we need to check the financials. We will require income taxes. We will require pay stubs, profit and loss, whatever we can provide the bank to say, yes, our clients can still afford the house if you give them an opportunity, if you give them a more affordable mortgage payment. And here are the financials to support us. So pretty much it's like getting approved again for your own home. This process may take between 4 to 6 months, depending on the lender. Once it gets approved, they will give you a new monthly payment and something that is called a trial period, which means that you're gonna do these payments for the first 3 or 4 months, and the bank is gonna see if you can really afford it. They're gonna give you the opportunity. You have to pay on the first of the month. You can't be late, and then once you pass this trial period, they will approve you permanently, and they will send you a new note that has to be signed in front of a notary and will be recorded in the county as your new mortgage note. The terms will change. Yes, you will have a new loan amount, you will have a new rate, and therefore you will have new terms also, because they may extend it from 30 years to 40 years. Even though if you had it already 20 years left, they can extend it back to 30 years, just to make it more affordable, just to help you to lower that monthly payment. You don't have an option to say, oh, I want to lower it to 30 years or I want it to 40 years. It's whatever the underwriter decides at that point to make your loan affordable again and give you the opportunity to keep the property. Now, everybody has the opportunity to apply for a modification. As a matter of fact, it is mandatory for a lender to put you through a modification process first before doing anything, before proceeding on the court to foreclose the home, before allowing you to do a short sale, which we will talking a little bit about short sales. So for government loans, it is a mandatory step. You need to be first denied for a modification in order to proceed with other foreclosure alternatives.
Okay, right. You have to be denied. You hear that, guys? You got to be denied before you can go through the other alternative programs that there are. Okay. Okay, that's perfect. I didn't know that. That was a new.
I also wanted to alert you that it is a great opportunity to save your home. Mm-hmm. And I have seen clients that have modified more than one time, because 30-year loan is a very long period. I have seen clients that have gone through hardship maybe twice, and I have helped them. I have seen clients that have gone through divorces, that in the family, etc., and then they had it a third and a fourth time. And sometimes the lender will allow it. However, if you are late after a modification, the process for the bank to foreclose your property will be faster. So you may hear people that say, oh, I have not paid my mortgage for a few years or for many years. And somebody may have only be behind for 6 months and they get a foreclosure notice. Why? Because they already modified the loan before. That means the bank already gave them an opportunity before and they failed. So they are late again, and the bank they accelerate the process.
Oh, so that's good. That's good to know. So you're saying if I would have done a modification and if I didn't adhere to my modification, that they'll foreclose on my house sooner, that they would, like, be my house. If BMI never did a modification, they have to go through the judicial process and not foreclose as quickly.
Exactly.
That's good to know.
So it will be faster. It is accelerated. Once you get and I have seen so many cases, and some of them my heart breaks for people who are really struggling, really try to make it. And I have seen other cases where people just try to take advantage of the system. But also, I have seen people who have been approved for the modification and they have been making their payments, and truly another hardship happens, and they have no other choice than to sell the house. So then it will be faster also to be approved for a short sale, because they already went through the modification process, so they don't have to go again through that.
Okay, that's good to know. Okay, that's really good to know.
So what's a short sale? Short sale means that you have a current balance with your mortgage loan, and the value of the property is less than what you owe. So let's say your mortgage balance is $600,000, and the value of the property is $500,000. So you are short $100,000 to pay off the bank. On top of that, you have to keep in mind that you have closing costs, which means transfer fees, which means realtor fees, which means attorney fees, maybe past due taxes, past due sewer. So all this has to be taken in consideration because it adds up. So there is a lot of people who are trying to sell their home and they are not even breaking even, or they have to come up with $20,000 and $50,000 to the closing table. So it comes to the point that, oh no, I don't have the money. Oh no, I can't pay that. Then our job is to put a perfect financial portfolio to present to the underwriter and let them know that you can no longer afford the property. That's why you're selling, and you don't have the capacity or the assets to come up with the balance. We need to prove your hardship. We need to apply. This process may take 4 to 8 months, depending on the lender. They will send an appraisal in a BPO, a broker's price opinion. So they will send 2 valuations to the property for the bank to understand what the real value of the house is. And at that point, they will say, yes, you are on the water. We will approve the short sale at X price. We will pay your realtor's commission. We will pay your attorney's commission. We will pay all your closing costs. Mr. and Mrs. Seller, you can walk out of this house with nothing, no debt, no money, but you can start from fresh. 3-4 years from now, you can buy another house that is more affordable to you.
So that doesn't impact your credit that much then, correct?
Impacts your credit, yes, but as long as your other credit cards, car payments, student loans, whatever you have on your credit report is on time, it will affect you, but it will recover. It will recover within a year.
Within a year.
Now, can you get a traditional mortgage loan in 1 year? No, you can't. You are penalized for 2 years on an FHA and 4 years on a conventional loan. Can you get one of these high-risk mortgages loans, which are called non-QM? Yes, you can. After 3 days of your short sale, you can purchase another home with these high-risk mortgage loans. But traditionally, you have to wait 4 years.
So wait. Go back to the high-risk loan. What would that look like? What is the interest rates on something like that? What's the credit score? They don't care if you can have a bad credit score.
Your credit score, if you kept your other debts on time and only the house was the bad reporting on your credit, your credit, and let's assume you had a credit over 700 because you were paying everything on time. So that means you will have your credit would drop 150 points. So if let's say you had 750, now your credit is at 650. Can you purchase a house with that? Yes. 620 is the minimum. So yes, you can. You will need to come up with 20-30% down payment because now it's a high risk loan. And yes, your interest rate will be higher. 2 to 3 points higher of whatever the normal rate is.
Okay.
But it is possible? Yes, it is possible. Most of the people will recover and will wait 4 years. We recommend that you manage a good rental history for the next 12 months. So at least we have that and say, okay, he or she lost the house. However, they recover financially. They make the right move. They are paying on time their rent. Here is the proof. They can get another mortgage loan. Okay, so once the bank accepts the short sale, means I approve at this price to this buyer the closing of this property, they will give you a forgiveness of whatever balance it was due at that time, and you will receive the closing documents, your CD, which will be your tool in order to report to the IRS that that property was a lost. So you don't have to pay taxes on your primary residence forgiveness debt. So let's say they forgive you $100,000. Your accountant will be able to document that yes, it was a forgiveness of $100,000. However, it was a loss at the end of the day. So you don't have to pay taxes over those $400,000.
Let me ask a question.
Mm-hmm.
Let me ask a question, Caroline, because this is one of the questions that I got from a viewer. Somebody said that do they still give relocation money if you're going through a foreclosure or short sale, and if so, how much? And is that money forgiven too?
Okay, before it was an incentive. They tried to give this money to sellers who were living on the property, and it was documented like a moving expense.
Yes.
And that facilitate the process so the bank didn't have to go through the courts and all that. Lately, the last approvals that we've been getting in 2025, we've been getting benign for those relocations. So I'm not sure if all the lenders are gonna continue doing that because we don't have the volume that we used to have it back in 2008, 2010. But so far, the current short sales that we are processing, no, they are not giving any relocation anymore.
Oh, okay, so that's a very important tip to know about. Okay, okay. Does anybody that's listening have a question? I'm gonna go between questions and let her speak from the hip as well, because I just want to make sure we get some questions, because I know we had some glitches and time is going. I'm just trying to put some questions in at the same time, Karoline, in between.
Sure.
I did have a question. You already touched upon it. You said what was the difference between foreclosures, a short sale, and somebody asked a sheriff sale.
All right. So we just finished covering the short sale process. Now, the other alternative is called deed in lieu. This is something that the lender is gonna mail you as a homeowner directly and say, "Hey, Mr. Seller, Mrs. Seller, you being late. We deny your modification. There weren't enough assets. There were not enough income, and we are offering you a deed in lieu." At that point, they may offer you keys for cash. It's called. Maybe $3,000, $5,000. I recently saw a lender that offered $9,000. The problem with the deed in lieu is that they come and inspect the property, and they will accept the property back. However, in this specific case, they ask the seller to repair the roof. So that's something that wasn't doable or feasible for our seller, our client, I mean, because he was losing the property due to a financial hardship. There was no way that he was gonna spend $15,000 changing the roof. Right. So it didn't make sense. This is an option that, at least in this area of the country, doesn't make sense. Another reason why I do not recommend this is because you sign that deed back to the lender, and the lender processes that. But in order to get it recorded and to get it through the court, especially if they already had it at foreclosure proceedings, it may take up to a year. You leave the house because they ask you to sign the document and leave the house. You leave the house, however, the deed is not recorded yet under the bank's name, so it may still be under your name for a year. The property is vacant, the property may be vandalized, it may be an accident on the property, it may be, with those horrifying news that we hear, a homicide, a rape, whatever happened on that property, The police is gonna come and the police is gonna call you because it's still gonna show your name on records because the bank took so long to change it to their names. If the house goes on a fire, the insurance is still under your name, even though you are not paying because the lender is paying. But because the house is still under your name, you're still responsible. I had a case many years ago when my client was trying to buy another home and he couldn't get an insurance because this is what happened. Many years ago, he signed a deed in lieu and the house was in a fire and it was still under his name. And he couldn't just get another insurance because of it. I mean, the insurance that he was getting was crazy expensive. And we find out it was because of this reason. So I do not recommend that because you never know when they finally are going to transfer the deed. We also had a case where the clients moved. They actually moved out of the state. The lender sent the package back because there was one missing initial. So the paperwork was never processed. My clients didn't know it was never processed because they sent it back to the mailing address of the house that they already left. And they had it a house as a foreclosure and they keep telling me, no, we did a deed in lieu. They sent me the papers. I called the bank and the bank told me, oh no, we couldn't complete the process because one missing initial. So I do not recommend that. When you do a short sale, the moment that you sign at your attorney's office, you know that the deed and the title is transferred.
Okay.
And that's the end of your responsibility. So the best thing that you can do if you can't afford your property is do a short sale.
Okay. I have a question.
Sellers is the case.
Okay, I have a question from someone. Someone said, "Can you explain the difference between a home equity loan versus a second mortgage?"
Okay. Yes. A home equity loan is a mortgage loan that you put on the equity of your home, which means my first mortgage is $200,000. My house is worth $500,000, so I have $300,000 equity. The bank will not let you take out the whole $300,000, but you can take a portion of it depending on your credit and your income. So you have two options to pull that money. It can be a home equity or it can be a second mortgage. A second mortgage is a regular mortgage, it's a fixed mortgage for 30 years. The moment that you do your closing, they give you, let's say you're taking $100,000. They give you $100,000 and you know what your monthly payment it is and you know what your interest rate is. The home equity is a credit line, which means you're going to apply for the same $100,000. But you are not going to take it out. You're just going to have it there ready. Just like a credit card, you can take the whole $100,000, or you can take $10,000 today, maybe $20,000 tomorrow, maybe $2,000 the next day, and you pay a variable interest depending on the money that you take. So let's say I took $10,000 first. I will have a monthly payment based on those $10,000. Then 4 months later, I take $40,000. So then I will have $10,000 based on whatever interest rate I had it at that time, and then the $40,000 on the interest rate that currently it is. So it is a variable rate, and you can pay it down and have the money and use the money again. So maybe I use $30,000, I pay them down. A year later, I need it back. I take again the $30,000, and it's still there, still available. It's just like a credit card. Now, the process of the foreclosure with these loans. Years ago, I would say don't worry about it. They would try to foreclose, but they really can't because the first mortgage has the first right position, and they are the only ones who can foreclose. Well, things change. Now, due to the fact that the properties have so much equity, let's say your house is worth $600,000, your first mortgage is $200,000, your second mortgage is $200,000 or $250,000, they will take your house away. They will pay off the first mortgage and they will keep whatever equity they have or resell the property. So now, yes, be very careful. People years ago used to say, oh no, I'm just paying my first mortgage and forget it. I'm not paying my second mortgage because I can't afford it. No, now is let's work it out because we can still do a modification on the second mortgage if needed or do a settlement. But we have to try to resolve it. Now you can't just ignore it because they can repossess your property.
Oh. So you could, if you're only late on one mortgage, you can do a settlement for that and then still pay your first mortgage?
Yes, you can continue paying your first mortgage, and let's say you were late on your second mortgage, we can help you to do either a settlement or a modification just on the second mortgage.
Okay, that's great to know. I have a very interesting question here. Somebody said, "What happens if you're living in a foreclosed house and paying your money to the landlords?"
Okay, so let's say you are late and the bank sends a notification to you and notify the tenants. You have, as a homeowner, you have the right to continue collecting rent because you still have responsibilities. Not only that you still have to pay the mortgage, but you have to pay the water, you have to keep maintenance on the property, etc., etc. So the court will send them a letter stating that this property will be foreclosed on X day. You will need to pay your landlord rent until the court sends you a different notification. So now they do that because a lot of tenants were taking advantage when people were late. Also, like, oh, if he is not paying, while I will pay, right?
Right.
So now the court protects the homeowner and say, no, you continue collecting your rent until we determine difference. So once the house is foreclosed, the lender will contact the tenants and will say you need to move because now we are taking over the property. Or sometimes they hire a property manager and they say, okay, now this person is in charge representing us and you pay the rent to them, which can be or should be a real estate professional, a real estate agent. But that's the worst thing that you can do. So if none of these foreclosure alternatives are part of the solution that you need, or that you try, or you ignore, as I said, the calls and the letters, you get a foreclosure notice, which means your house will be in sale on X day on the sheriff's sale. Once you have that date, you do have the right to extend it because either you just realize you need help and you look for an attorney or you look for a company like us to help you, and we stop the foreclosure. And for a month or 2 months, at least to try to find out if there is any solution. Don't wait until the last day of the end because it is difficult. The bank doesn't have any motivation to help you anymore because they already have a court order to repossess the property. But sometimes it has get to the point that until the very end, they look for my services. And at that point, we stop the foreclosure and we try to resolve it and see which option is the best option for our clients. But if they foreclose the property, they will send you a notification to remove all your items, and usually it's 30 days after they foreclose. Or if somebody purchased that property at the sheriff's sale, they will come and knock on the door. An hour later, they purchase the house and say, hey, this is my house now, you need to get out. But officially, they have to give you 30 days as well.
Don't you get 2 adjournments or postponements before the foreclosure takes place, full effect?
Yes, that's what I say. We can get you an extension for a month or 2 months. Yes, we can. And even though sometimes a third one, if we are already in process and we're already in contact with the bank and we're already under negotiations, they will postpone it more.
This is a very good question. Somebody asked, what programs are still available under this new administration? And they put MHA, NJJFM. I don't know what that means.
Okay, those are programs for first-time home buyer. Those are for financing, and they give you a grant, they give you a down payment, or they give you a special interest rate. So let's say the current interest rate, for example, is 6.5%, then they will give you a 5%.
Really?
It is government money, yes. They are more stricter in the way that they qualify. So if us as a regular lender will approve you up to $500,000, maybe they will only approve you up to $400,000 because the guidelines are more conservative. but they give a better rate.
Okay.
Yes, and then they have all these down payment assistance that will be more than happy to do another live with Felicia to explain you about the programs and the grants and the down payment assistance that they have.
Will everybody be interested in that? Because I know we had some glitches earlier, but I think I'm going to have Karoline come back again and talk about some more things and details because I know it's becoming of that 8 o'clock witching hour. Someone asked. I'm told that foreclosures can take up to a year, but I think in certain counties, is that true?
Yes, and just for you, regular information, years ago they used to take 7 to 10 years. Now they are faster because lenders already know what they're doing, and attorneys are processing faster, and the courts are not as busy as they used to be with all these cases back in 2008. But as I say, I have a client that was late 6 months, and he had a foreclosure date already posted at the door, but that person already did a modification before. Remember what I told you?
Yes, you do the modification, it goes faster.
Opportunities.
Yep.
So it was faster now. Yeah, but it really depends. Nothing on the county. Depends on the lender because lenders may have more volume than other ones. Some services are bigger than other ones. Some of them have better attorneys than other ones.
Right.
And the system, yeah. So Essex County, for example, the court is very overwhelmed. Union County are overwhelmed. So those counties definitely are gonna take longer. Hudson County, this is a bigger population.
Right.
And there are some small counties like Somerset that they are so nice and they just give you like 4 extensions, They
Right.
don't, there are more people person. So it really depends. However, you can't say, okay, I have 1 year and I'm not gonna make the payments and I'm gonna save the money and it's gonna be 1 year. You never know, and things may change because with the new administration, we're seeing things are being more stricter, so they can definitely change it. But it depends on every lender,
Yes.
realistically. I see another question that says,
Yes.
how do I get the security deposit back if the house goes on foreclosure? You don't get the money back unless the landlord is truly honest and will write you the check. Sometimes the landlord will say, okay, I'm losing this house. Just leave the security, leave this month because I'm losing the home. Or if none of this happen, you can always go and file a complaint at the landlord's tenants court, and they will get you the money back. It may take years, but believe me, they will get you the money back. I had in one case that I run the credit for the clients. They were purchasing a home. Nothing came out on the credit, but when we were getting ready to close, they run title and they had a judgment that the client didn't even know. And it was a tenant years ago that put a complaint for the security deposit that they forbidden because the apartment was damaged. But they went to the court, they were not happy with it, and it was 11 years later. My client had it to pay in order to close. So you will always get it back in case the clients will continue with their financial life years later. So yes, you can get it.
How can agents partner with you, and would you return the referral or give referrals if you saved their home?
Okay, so I'm putting my office number there. I'm gonna put my cell phone number as well, and I will add my web page. Our program, yes. So what we do is, if agents refer us a client and we approve them the modification, and the client truly can save their home and it makes sense for them to save their home, we will send the client a referral fee for marketing. And this is our legal way to put it. But if the client can get it approved, we will return the client to that agent to do the short sale. So we will include in all the paperwork the agent's name, and we will copy you on the email so you understand where the process is with your client and you don't lose contact with the client. So they brought you to our office, and we want to make sure they put the house for sale back with you.
Okay, that's good. That's very good to know. Another question I had here was, how much does it cost a homeowner if they're using your service? I don't understand this question. How much does it cost
Okay.
homeowner if you help save their house? And how much
Yes.
does it cost to go into negotiations?
Okay. So if we do the short sale negotiations for the client, we get paid directly by the lender. We don't charge the client. Obviously, the seller is going through a hardship. We pay the 6% to the agents. So we don't take any money from the agents. We try to get whatever the highest fee that we can for the attorneys, but attorneys don't get involved in the negotiations. They only do the real estate contract review, inspections, and closing. So we do all the negotiations. We get paid directly by the lender. Each lender will pay us in different ways, but all our fees are on the HUD. We don't get paid until we close, and it is also a big motivation for me to close so I can get paid, because you guys don't get paid if you don't close, neither we do.
That's
so
right.
We don't want to work for free.
That's right.
We wanna help the seller get out of this and start from fresh, sell the property, but we need to get paid and compensated for our job, so we get paid at closing. Now, if the homeowner decide to keep the property, we charge $4,000 for the to help them for the processing, and then from them we give them a referral fee to the agent. We split the payment between, but by the time that we start, they do that deposit, and then they pay the balance once the loan is approved, the modification is approved.
Okay, that's very good. That's very, very good. This has been some insightful information, Caroline. I really appreciate it. Are there any other questions out there in the question land? I know we lost some of the viewers, but Kevin, I didn't hear from you. You normally have some great questions. Bernie, Lisa, Leon, thank you for your question. Bima, Marley, Gary. Anybody have any questions for Caroline? This has been really some great information. I really appreciate it.
Well, I'm happy that I was able to participate, Felicia. Thank you.
You're more
Thank
than
you to all the viewers that join us. You have my information. I'm sure many questions may arrive tomorrow to your head, or clients. Feel free to contact me, and to all the real estate agents that are joining us or listening to this video. Once you go to a listing presentation and you see that their property is on the water, take a 2 minutes break, call me right there, so I tell you, or email me, and I will send you a script with the specific questions that you need to ask the homeowner, because the key to get that listing is knowledge.
Yes.
And you need to be trained for these distressed properties. Sellers are not motivated to sell. They want to keep the property. So you are fighting against the reality, and you need to be very, very touchy about it. So I always tell my agents, please feel free to call me before going to the listing, or call me with questions and I will answer for your seller. And the way that we present ourselves, we're a team. And Felicia knows, we are a team. We present ourselves as your assistants, as your short sale specialist, your short sale team. I go under you. I don't promote my company to sellers, because they don't give me business. You guys are the one that give me business. So I want you to get those referrals back. So we present ourselves as part of your team, as the short sale specialist. And once you start the conversation, we take it over just as your assistant. I will need this and this and this, Mr. Seller. And sometimes they are skeptical. Sometimes they feel that they make a lot of money, that they are not going to qualify. And that's not true. Everybody qualifies for a short sale. I remember, Felicia, when you were back in Pogo, I had a client, or one of your coworkers had a client that was a surgeon, a doctor. The doctor had a house. The mortgage was $4 million. He made enough money to pay, but the house was underwater, and we got the short sale approved. So nobody makes too much, because when you make more money, you spend more money. And I am the expert to put that financial profile perfect to get a short sale approved.
I love it. I love it. These have been some golden gems. I really appreciate it. Someone left a question in the chat. If you sold your house, how much do you have to claim on your taxes? I don't know.
Expert to put that financial profile perfect. If you sell,
If you,
what's it?
if you sold your house, how much would you have to claim on taxes?
Put that question in the. Okay,
I'm gonna
so
change the question.
I can advise you a little bit about. I'm not an accountant, but thanks to these 30 years of experience, we have learned a lot, and I do have a very good accountant that I'm very grateful. She has taught me a lot. But pretty much, if it's your primary residence, you don't pay a penny. You can make a gain of $400,000. You don't have to pay a penny on capital taxes, because that's your primary residence. If it's an investment property, yes, you will pay. And it's not a flat fee, and it's not a specific percentage. The accountant will take the value of the house, how much you purchase, how much the house depreciated through the years, all the improvements that you did, all the maintenance will be deducted as a loss, how much you sold it, and then whatever that net it is, it will be taxable if it's an investment. And that tax amount depends on your tax bracket. That may be the only income that you have in a year. Or you may have a job and that's your extra income. So it really depends on the tax bracket that you have. But only on investment properties. On your primary residence, you don't pay a penny.
Good stuff. Really, really good stuff. I want to thank all of you guys for hanging in there. I know we had some other people, they probably left because of the way we had those technical glitches. But for you guys who did stay on, I want to really thank you from the bottom of my heart. Karoline and I really appreciate it. And it's great to provide information, because information is needed in these days and times to help us excel and go to the next level. And I always end my commentary by saying sharing is caring. And for me, sharing is really caring. So if you or someone you know, you might be standing in a store, you hear somebody saying that they're having a hardship or going through something. You have Karoline's number. You know my number. Reach out. Because as a community, and I say community meaning anybody that has red blood, we need to be able to be there for each other and try to help those in need. So if you know of someone that's experiencing hardship, rather than see their house go crumbling down and they not get anything, or they have their stuff thrown out in the front lawn because of the sheriff's sale because they did nothing, reach out to Karoline or myself. If Karoline can't help them, perhaps I can. There's always different opportunities that could be available for them, for everybody's situation, as she said, is so unique. And stay tuned to my Tuesday talks. I think I'm going to just stay with the phone because that's an easier way of getting online. But I will stay with the phone because that's more easier, I think. But I like this big screen. I really do. I'm really feeling the big screen because I can see the questions. I'm not squinting my eyes. Like last time when I'm on the calls, I'm squinting. I can't read. People are calling me and I'm like, oh, I can't see this. So I do like this. So I'm going to just try to get someone technical to check out all my technical issues. So next month, we're good. I think my next month's speaker is someone talking about insurance. So if you or anyone you know is interested in insurance policies, life insurance, all sorts of insurance, that one is going to be a good topic as well. I will definitely bring Karoline back on perhaps in the later part of the year to discuss some other things because she has a whole wealth of knowledge of doing different things, and she's very knowledgeable, and we definitely want to connect with her. For any agents that's listening, do a JV with Karoline. She's very willing to help you with your business. She already said that, hey, if you meet someone that's underwater, call her. She'll walk you through and navigate you through what you need to do. I know I had an agent that I was training under me at an old company. She didn't know how to do short sales at all. She would call me and ask me about them. But now you have an extended arm. Call Karoline. Because now we have branched off, went to different offices, and she needs someone to help her with her short sales. She should have been on this call if she isn't. But call Karoline. She'll be more than happy to help you through those waters. And I just want to thank everybody. Is there anything anybody wants to say? Because I know we've been on the call for almost an hour. Thank you guys for hanging in there. Thank you guys who didn't come back. You can always catch this broadcast because I upload it on my YouTube channel. And hopefully you have gained some important information. Thank you so much. No other last minute conversations? Nobody have any questions? Karoline, would you like to close with anything?
No, thank you very much to everybody, and let's help some people. As Felicia say, we're part of the community. Sometimes we have to give back. Our consultation is free. Feel free to call me, and realtors use all these years of knowledge that we have. We can share with you any questions. Any seller may have questions that you don't know. And I'm also doing trainings on the offices for the new agents, or for the agents who need to refresh what the short sales and foreclosures used to be. Things have changed a little bit. And I'll be more than happy to do these workshops if anybody needs it.
Again, thank you, my friend Karoline. And you know what? We got to go out for drinks.
Definitely. Next Thursday.
Yes. Thank you guys all for coming
Bye-bye.
on. You guys are off. And give yourself a round of applause. I really appreciate it. Thank you for your support. And stay tuned for next Talk Tuesday, the end of the month of next month. Bye-bye.
Bye.
Bye, everybody.